Well, from footwear to mattresses, right? I mean, Sheela Foam is the company we are talking about. They posted good first quarter earnings. The company's managed to expand their gross margins sequentially despite a sharp rise in TDI prices. We have the management with us. Rahul Gautam is managing director of the company. Rahul, great to have you with us here. Good morning. Thanks very much. I mean, before we come to margins, etc., in the conference call, you said that you're closing a couple of plants down in Spain. Can you tell us more? Have you done this and why are you doing this?
Thank you. Thank you for having me here. No, I think probably there has been a misunderstanding on that issue. We are not closing down any plants in Spain. We have only one plant. The only thing that I said is that out of the large European market, it's a small speck. You know, it's only about 1% of what the Europe does. And therefore, whatever may be the recession, etc., in Europe, we still have scope to grow. No, we are not closing down any plants.
Were you saying that there is some pressure on other players there?
Yes, there is a lot of pressure. In fact, if we will take the last 6 months, there is a drop of almost about 25 to 30% in most of the people, and that's because of the recession which is there and because of the fuel costs that are there.
Your one plant continues to operate and will continue to operate, right? And what capacity is it operating at?
So it's currently operating at about 80% capacity, but we are actually expanding, you know, and that process was decided before all this recession started. But we are bullish on that, and we are continuing to expand. So our 1% may become like 1.5%, and we have markets for that.
Okay, in terms of growth, what are you looking at? The revenue growth in Q1 was a healthy, almost 60%. What are your targets for the full year?
So Sonia, let me just clarify that this 60% looks very nice, but it was you know, on a very small base of last year. But as we grow this year, on an average, anything between 12 to 13% growth we must have when we close the year.
12 to 13% growth by the end of the year is what you're looking at?
That's exactly. And, you know, in between, of course, are periods where, you know, the bases have changed in the last year, and therefore, I think to look at a complete year would be more relevant.
Is it because, are you looking at a conservative growth rate because of what's happening in the Australia business, in the European Union, a bit of a slowdown? Is that the right way to look at it?
So I was definitely very conservative, though I must add that as far as Australia is concerned, Australia just seems to be unaffected by whatever is happening in the world. I think it's too tucked away into one corner and has a market of its own. And the deglobalization is also kind of playing out there. People are preferring Australian products, etc. So the current business is at a very healthy state. In fact, whatever is the projections, we are slightly ahead of that. When I said 13%, I was being conservative. It would be higher than that, but I was just being conservative on that.
Okay, the reason I asked is because you have a new plant that will come up on stream by October of this year. So that's, you know, in 2 months from now. Once that comes up, what is the revenues that you're targeting from there?
So, Sonia, there I have to share that that plant is going to be delayed on account of the plant and machinery, which has been delayed because of some special steels which were to come from Ukraine. And, you know, while looking and trying to find out for alternates, it has taken time. So this is not going to happen in October, but it's going to happen more like end of Q1 next year. And so there's going to be a delay, and the impact of that plant starting will only be in this subsequent financial year.
All right, Rahul, we'll leave it there today. Thanks a lot for joining us.